In this video, we'll learn about how to catch the high and low of day using cycles. By that we mean, how can you catch the high of a day that is starting at this point and ending at this point, actually trading off these zones within the practical markets. That is what we'll actually talk about within this video. So sit back, relax, and learn something new. Just a brief talk to someone. There comes a point in every trader's life when it just doesn't seem worth it anymore. Should I keep on pursuing this trading thing, or looking for more information, or looking for a mentor, or anything of that sort? So I'm just here to tell you that don't let yourself be intimidated. Trading is tough, and the secret to win is to make the charts your friend, not to fight them. Join us in our next upcoming mentorship program. See more details in our free Telegram channel. I'll leave the link in the description box below. So what is the high or low of day? This is the highest or lowest price the market may reach in a day. That is, if we were in a downward trend, there will come a time where the market will actually make a reversal. If we're in an upward trend within that particular day, we are talking of intraday moves, there comes a time where the market will actually reverse. However, not all days can be determined at these points. Some days are days of choppiness, whereby we cannot deem a high or a low. It is very, very difficult to do so within those particular days. And most of the times, we use the previous day to determine the high or low of the current day. So, for instance, this is Monday. We can actually use the flow that happened on Monday to determine the low or high of Tuesday. So, let's learn how to do it in the next slide. Here's the procedure of actually catching these highs and lows of days. We use 5 indicators to help us determine these points. Someone may actually say indicators are lagging, but in this case, we are not using these indicators to give us entry points, but as a way to aid us see these impulses that we are about to talk about. These are 5, 13, 50, and 200 EMA, and the TDI indicator. The TDI standing for the Traders Dynamic Index. Since we are using cycles in our procedure, we need to see impulses on the M15 time frame. On that note, we are saying the time frame of observation for this particular strategy is the M15 time frame. These impulses are termed 1350 cross 50, a bounce on 13 or 50, bounce on 13 or 50, then pattern on M5 and entry. I'll repeat that again. We are saying the impulses that we'll be observing will require the first impulse to have a 1350 EMA cross. Then the second impulse starts as a bounce on the 50 or 13 or 50 EMA. The third one bounce on the 13 or 50 EMA. And then last but not least is to find a pattern on the M5 time frame. The pattern in subject being a W or an M, like that. So below is the illustration of this concept. We are saying the first impulse will require a 1350, the second and then the third will require this 1350 EMA touches, and then the target actually from there, from the second 13 or 50 EMA touch, we now look for a pattern, and then after that pattern, our target will be an M15 200 EMA. This pattern should be actually confirmed with the TDI with rising strength for this particular context. So let's now go over the charts to see how everything works. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. So this is Euro against odd, and we've said the first thing is basically to just look where there was a 1350 EMA crossover. So for the sake of those who do not follow this channel, or who are still new on our channel, we are saying the 13 EMA is the one in red, 50 the one in blue, 200 the one in white, and the one on the bottom part is the TDI or Traders Dynamic Index. The first thing is to see a 1350 EMA cross that occurred at this point. Then after that, we need to see a bounce on the 50 or 13 EMA, which is this one. From there, we need to see another bounce on the 13 or 50. In this case, we had a bounce on the 13, which is this one. The next thing is now a pattern on the M5. I won't be switching to the M5 because this will actually hinder all the other examples that I want to show you. The next thing is now to see a pattern. It can also be seen on the M15 time frame. We can see the first leg and the second leg. To confirm this, we need to see a divergence on the TDI. We can see that the relative strength index on the TDI is rising, whilst on the price chart is dropping. This is actually a very good way to confirm our pattern, and our entry is always done on the second leg and exit at the 200 EMA in white, like that. The next thing, we start again to look for a 1350 EMA cross, which occurred at this point. Then twice bouncy on the 13 or 50 EMA. Unfortunately, within this cycle, there was nothing like that. Therefore, it was a pass, right? So this is going to give you some cycles whereby it's going to be very difficult. Like in this case, you can see there was a 1350 here, a bounce on the 50 that occurred at this point, but then there was a bounce of 13 at this point, right? Therefore, we were actually now expecting to see this as a pattern. However, we are not going to be taking patterns that occurs in the Asian session. Within this period, it was my Asian session of my time. Our patterns can only be taken in the London session, which is at this point. So timing is also a very, very important thing within this. So to confirm this, we can see that there was a slight drop at this point, and then the relative strength index is the one that should tell us that we are on a rise, right? Then after that, where was our next 1350 EMA cross? It was at this point, and then did we have any flow to the upside? We did not. Therefore, this was not valid. Then another cross was issued at this point, a flow retest of the 50, flow retest of the 13. We reach a point to expect a pattern. A pattern was issued on the M5. We would see first leg and then second leg, like that. And on the TDI, we can see one leg outside of the bands and the other one inside of the bands, which is a valid way of confirming our peaks. We could actually make our entry, and then we can see the market reached our target, which is the 200 EMA. Where is our next crossover of the 50 EMA? And 13, it occurred at this point, right? But within this case, we can see that we had one and then a consolidation. There was no the second touch to actually expect or anticipate a pattern at that point. Going further, we can see that we had a crossover, perfect, bounce on the 50, perfect, and then the market came back to the same zone. Therefore, this was, we call it a queued impulse. Then that queued impulse was revived when the low was broken. Therefore, we had 2 and then 3. The third one, a pattern was issued and our target was met, like that. Then here, there was consolidation, cross of the 50, 1350, bounce of the 50, bounce of the 13 was issued, and then a pattern was issued. Target was met. So basically, that is how you will be catching the lows and highs of day. So this is basically a low that was actually obtained by using a flow, the other flow that occurred on this day. So that is where we were deriving the point of saying some days we can catch the highs and lows, and some days we cannot catch the highs and lows, and in some days we require the previous day to give us a flow to determine the low or high of the current day. So on that note, we come to the end of this video. See you on the next one, and don't forget to check out our free Telegram channel. I'll leave the link in the description box below.